So we've been seeing a lot of choppy motion in the S&P the last couple of days, and we've been talking about this a lot in the membership areas, and highlighting that this is OPEX week, and this choppiness has a lot to do with the pinning effects that come with option expiration. When we look at first of all optioncharts.io, you can clearly see there's still a pretty heavy negative gamma exposure out there overall, which creates a lot of the back and forth trading action where we get these violent move up and then we get violent moves down, such as what we've been seeing really most of this week. Once we get past tomorrow's opening, a lot of this gamma profile will really begin to change. In fact, when we just take out today and tomorrow's OPEX dates and apply it, you'll see that the total amount of gamma actually changes quite significantly. So market's going to be much more able to move freely. And today, for example, this is GEXBot. You can clearly see, 5,700 has been the call wall now for a couple of days, actually going back to last week, and that continues to serve as resistance today. 5,600 has been sort of the big gamma level with the put wall down at 5,500, and that's really what's creating all of this back and forth trading between 5,600 and 5,700. On top of that, we have a condition where liquidity has essentially vanished on the top of book. That is not unusual. We typically see liquidity really dry up on the top of book when the market starts coming down. We've talked about this quite a bit in the past, and we haven't really talked about it a lot recently because it hasn't really been much of a factor. You can see the bid-ask spread has actually really gotten quite wide as well at points, and it's still pretty high. So this coupled with the negative gamma regime is creating all this sideways choppiness. Now, like I said, once we get past tomorrow's OPEX, these gamma levels are going to reduce. That's going to really begin to allow the market to move outside of this range. Now, not next week, but on the 31st, you're going to have the JP Morgan put option expiring. When you look at it, it's right here at 55.65. When you look at the open interest levels, you can see that. And when you look at the gamma exposure, there it is right there. So there's quite a bit of negative gamma being created by this. And this could obviously work as sort of a magnet pulling the S&P down to that 55.65 region. From a technical perspective, you can start to make a case that maybe there's, a bear flag forming in here, and that if we were to break this 5,600 region, we would probably see a drop back down, and this gap is still certainly sitting out there at 55.20 waiting to be filled. So there's plenty of room for this to really move down, and next week will present that opportunity given that we're likely to lose the pinning effects that we've seen in the last couple of days. The other thing that's noteworthy is we've seen, interest rates here in the U.S. come down a little, although they managed to bounce back a little bit towards the end of the day. They were down to around 4.17 earlier. And, again, we're kind of breaking this uptrend, this mini uptrend that's been in place now for some time. It, again, looks a little bit like a bear flag, maybe a wedge, and it would also suggest that maybe rates are going to be heading a little bit lower over the near term here. And, when you couple that with the fact that, we've talked about in the past this relationship between the US 10 and the Japanese 10, we've clearly seen a move below support, which is around this 280 area. We're trading around 271, it looks like, at last check. And again, it also looks like we're probably getting ready to make another move down here. And if that's the case, that's probably going to lead to, further yen strengthening. So we need to really just be on watch for this, because we know that the relationship between the S&P 500 futures and the Japanese yen trade has been fairly strong more recently. And if we continue to see the yen strengthen, there's also the potential there for the market to move lower. And from a bullish standpoint, at least when you look at the S&P, it's really all about the 5,700 level, and that's been the big hurdle for it. That's also where the 10-day exponential average lives. So if you can get above the 5,700 area, then you have room to maybe move up to around 5,785 or so. But, a lot of the things I'm seeing out there don't really correspond to that happening And so that's why I'm thinking that this is probably setting up in a way that maybe we're looking at another, sort of leg down here. I think if the JP Morgan collar, although it's not till the 31st, it could really be a little bit of a drag on the market as we go through next week. And it's possible that if we get down there, it could also pin the market around that 55-60 area for a couple of days as well. Anyway, that's all we have for today. Hope you remember to subscribe to this channel, like this video, share it with your friends. Please remember to check out my membership areas as well. Anyway, have a great evening, and we'll see you again soon. Bye.